What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday. It's time for the weekend. It was payday. And it is time for the Fang Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major Fang stocks. All we are waiting for is next week, when Nvidia reports their earnings on Tuesday. Will that send these stocks higher? Will we get further pullbacks on these stocks? Are there great buying opportunities now for some of these stocks? Spoiler alert, there are some great opportunities. And where are those levels? We'll talk about that on today's show, but we kick things off like we always do with Meta Platforms. Started the week closer to $299 per share. We broken trend on this one. We were down by about 5.5% to finish the week, close to $283 per share. The big mega cap tech stocks are getting a call from a Democratic senator, Senator Mark Warner, a Democrat from the great state of Virginia, looking for voluntary commitments to promote greater security and safety, since they can't actually pass a law as it relates to AI security. I mean, they could if they actually did a job in Washington. Since they can't, he has to send letters and ask nicely. Moving on to Apple. Start of the week at 178, like pretty much all these stocks, down over 2.2%. The finish of the week, we'll call that $175 per share. Apple and Intel among the U.S. companies that are raising their voice against India's PC and technology import bans. On November 1st, the great country of India intends to impose a new license requirement for technology imports. This includes laptop, tablets, personal computers, servers, and parts for data center. Not exactly sure why the country is doing this. Maybe simply to encourage more production in that great country. And that's exactly what they're getting. Apple's new iPhone 15, which is set to be announced, I believe, next month, sees the start of their production in India. They should start shipping these phones out of the country of India shortly after the ones from China come online. Not exactly sure the number or the percentage of iPhones that will be made in India. Apple made about 7% of their phones in India at the end of March. And it looks like the company, in reference to Apple, wants to get up to a higher percentage this time around. Apple may unveil a blood pressure monitor on their new Apple Watch, which again is scheduled to release maybe sometime in September. When the new iPhone gets hitting, you're going to have a new blood pressure monitor and maybe other different magnetic cases and bands. When I was in the Apple store just a couple of weeks ago picking up a new iPad, I had a chance to try on the largest watch. And as you guys know, I'm more of a Swiss watch fan. Tell you what, it actually looked pretty darn good. I think this was even the wristband that was on the watch. It actually looks pretty darn good. And I'm talking about the largest ultra watch. That would be the one, if I would wear one, would be the one I would get. Moving on to Amazon. Started the week at 138. This one down over 3.5% to finish the week close to $133 per share. Amazon is potentially extending their U.S. delivery to third-party sellers. This according to an email invitation that went out to sellers. I scourged through my inbox. I'm not selling as many products on Amazon, so my volume has really dipped since I've taken on a new role at Legacy Research. So I'm not selling as much as I used to on Amazon. But what's going to happen is you're going to be able to ship your products in the Amazon vans. And this is what we've theorized was going to be the case for the longest time with Amazon. The pandemic kind of threw a loop, I think, in this business just a little bit, in the fact that this is going to turn into the AWS of the shipping business. Look, Amazon already has 23% of the parcel volume here in the United States. UPS stands at 24% and FedEx stands at 19%. So this is a company that has drastically ramped up their shipping capabilities. And now if you're a third-party seller and you sell something on your Shopify site, or you sell something on Etsy, or you sell something on eBay, you're actually going to be able to ship that out via Amazon. And I think that's going to be a great business for the company. Moving on to Netflix. So the week at 421, and down about 4% to finish the week at $404 and some change. Disney, the aforementioned Amazon, and Netflix are called the new, quote, gatekeepers of media. This is according to the Writers Guild of America, which are currently on strike against the major studios. Now, this was not necessarily a compliment to these companies or an endorsement, but it is a compliment to Disney, Amazon, and Netflix essentially becoming the, quote, new gatekeepers of streaming media. And it's amazing how fast Amazon has moved into that role. And when we're looking at Amazon, taking a step back, a $1.38 trillion valuation, and you have Netflix trading at 180, both are seen as the new gatekeepers of media. I think there's probably some room to run there. Streaming TV hits a new top share of TV usage, while linear TV continues to find a new low. And as the generation that grew up on linear TV gets older and older, linear TV is going to be very similar to the people that get newspaper subscriptions thrown by a paperboy onto their doorstep, among other things. It's just going to go the way of the dinosaur at some point. Netflix testing video games on TV, PCs, and Macs, just a natural extension of what Netflix already has going on with its different TV franchise, creating video games. Certainly a good idea. Moving on to the stock of the week. That is Nvidia. Started the week at 408. Last week it was down 10%. This week got about 6% of that back to finish the week at $433 per share. Again, we are on the eve, just a couple of days, on Tuesday of next week, the 23rd. Nvidia will be reporting their earnings, and everybody, including this channel and the entire stock market, will have their eyes on this company. It's not necessarily going to be the most kind of recent quarter. If you look at this company, what the expectations are, yeah, it's $11 billion. Do I think Nvidia is going to hit that $11 billion and 65% growth? Yeah, I actually think they're probably going to do it pretty comfortably. I'd be shocked if it wasn't north of the high-end estimate for Nvidia at $12 billion. I'd be actually pretty surprised if Nvidia is not able to achieve that. It's really this next quarter, which again, we're expecting 108% growth for Nvidia. If they are able to blow this out of the water again, maybe come towards this high-end estimate, 14.7, $15 billion, $16 billion. I can imagine if this company is able to get their hands on all the component parts that it takes to make their high-end GPUs, they probably could be selling them. The challenge is they are supply constrained. We'll see how Nvidia does on their forward guidance. That certainly will have a huge impact on the rest of the trading week next week, potentially even the rest of the year. And we'll see how management over at Nvidia kind of frames not only the most recent quarter, but the guidance as well. I think if we are going to put our hand, basically the entire tech sector is in the hands of Nvidia. And look, Jensen Huang is one of the best executives in the world. And if we are going to put the tech sector in the hands of somebody, I tell you what, it could be in worse places. Now, the ARM IPO, ARM, which is the microprocessor device design that is in all of your iPhones, all of your smartphones, and if you own an Apple laptop, and certain other laptops as well, I believe, are using ARM instruction sets. Now, the company is set to go IPO. I've said it numerous times here on the channel. I would not touch, absolutely would not touch that IPO. There are going to be dozens of YouTubers that are going to put their surprised face in the thumbnail, and it's going to be ARM, and they're going to be so excited, and they'll tell you how great the company is, when in reality, they're going to show an annual revenue dip. The company's recurring sales down 1% year over year. You have competition obviously already existing from x86 instruction set, but also an upcoming kind of RISC-V open source instruction set. Companies are desperately trying to get away from the ARM license, not run towards it. Now, are there certain valuations? Is there certain price levels where we'd be interested in ARM? Absolutely. I don't anticipate that being the case when the stock goes public. Saudi Arabia, the great country of the United Arab Emirates, said to buy quote, thousands of Nvidia GPUs for AI. Saudi Arabia buying at least 3,000 of the chips. The UAE is starting to develop its own large language models. This obviously comes on the heels of last week, the great country of China purchasing or pre-ordering essentially $5 billion worth of the company's GPUs. Again, the company reports earnings next week. There's absolutely no way that they missed the numbers unless they were drastically supply constrained, which they are going to be supply constrained. If Nvidia could ship as many GPUs as they could possibly sell, their revenue would probably be 2 or 3 times higher than actually be reported. We'll see where this company lands. Moving on to Google. Started the week at 129, down 1.6% to finish the week at about 127.5. Alphabet's Verily mulls cost cuts amid pressures on that other bets category that Google reports every quarter inside of their quarterly earnings. Since the company has broken out their other bets business, they have seen more than $30 billion worth of losses. Now, that doesn't necessarily mean that they've lost $30 billion. It's more of a paper number. Some of those other bets have translated into actually revenue generating products, but it can be a source of frustration with Google shareholders, as they could have paid a dividend or bought back the shares, or maybe even bought a profitable company, certainly for $30 billion. Verily Life Science is a healthcare company that missed its forecast by about $17 million. Operating losses were $568 million on just $560 million worth of revenue. Google should probably stay in its lane of online advertising. Google is going to release their AI model called Gemini to power Bard and its other enterprise and cloud products. They're working hard on this Gemini. They're going to do APIs that tie into that, make it more extendable, make it as open as possible. The timeline to release Gemini, which appears to be, I wouldn't say more or less finished, but the training is ongoing, but they're also doing some fine tuning on it. My guess is this is going to be, I hate to use the word game changer, but it is going to be probably a step higher than what we've seen in the past. Otherwise, it'd be very disappointing for Google. Moving on to Microsoft. Started the week at 321, down about 1.5 to finish the week at 316.50. Microsoft is to close the Xbox 360's online store in July of 2024. Xbox 360 is not their current Xbox. It's kind of a legacy Xbox that the company released starting in 2005. Boy, that was a long time ago. My guess is they're just seeing waning demand as the Xbox has gone through a few generations since then. Moving on to Tesla, and speaking of moving, stock's moving down. Started the week at 236, down over 8.75%. Finished the week at 215. That, my friends, as you'll see in the technical segment, is a magic number. Texas and Tesla pairing up for a big win for a charging mandate. Tesla is going to get access to federal funds that Texas was awarded in a $5 billion federal grant. So very exciting for Tesla, as they've set up camp in the great state of Texas, and they are getting benefited from that. Tesla launched some cheaper Model S and Model X models with some standard range. Prices are about $10,000 lower than the previous versions, or the more advanced versions from a range perspective. And Tesla also trimming prices of some of its Model Y versions in China down by about $2,000 each. Moving over to the technical segment of the show, you'll notice we'll have our volume profile here on the left-hand side. If you're new to the channel, volume profile, what it does is showing you essentially where accumulation is. As the bars on the left-hand side stretch out, that is where you should see, if you are moving your way down, you actually should find some support. And notice where our support almost perfectly lines up is our upper trend line that we've been making really since the October lows of last year. Now, will the S&P 500 get all the way down to 4150? My guess is it takes a pit stop a little bit higher than that. People will probably start stepping in on the S&P 500 at 4250. Again, The markets are in an uptrend, depending on how you look at these things. The vast majority of people that I know are looking at this as an uptrend. You have more support to the downside than resistance to the upside. That tends to allow stocks to continue to go up. Now, the bear case argument for the S&P 500, essentially crashing to new lows, means you need to blow through the demand that is really baked in from 3,800 up to 4,200. You break through that, yeah, of course, you're going to retest the October lows and actually probably much, much, much lower. Certainly a possibility, but the technical chart tells you the higher, much, much higher probability is you make a down move on the S&P 500 followed by a rebound and a move higher. Moving over to Meta. Now, we've been locked in an uptrend since November of 2022. That is over, folks, because as you can see, we've broken through an area of support. Here now, the clearest area of support, again, we have our volume profile here. What I've noticed about, you look at the chart of Meta, you look at the chart of Google as well, there's somewhat equal distribution all up and down. That means you don't have large cohorts of Meta shareholders sitting on huge profits. Yes, there are some people sitting on some large profits. There's actually a lot of people that are just up a little bit on their Meta shares. There should be some demand for the shares down here at about 267. If you break through these areas, the next week or two with Meta is very critical. If you break through these areas at like 250, 260, you're probably coming down to a much lower area. I would say south of probably $220 per share. Notice I've increased our green box. There's a large area of consolidation for Meta between, I mean, it's really wide, but like 120 up to 220. That is where I would be more or less excited about Meta these days. Moving over to Apple, also very similar to Meta. This uptrend, now the longer term uptrend obviously is straight up in the air for Apple. The intermediate trend even for Apple is now more or less higher as well, as you made highs, another set of higher highs. You put it on a monthly chart, it would look a little bit cleaner. But shorter term micro trend is we've broken that and we're heading lower. And where's the path of least resistance for Apple is support down here south of 150. You get some opportunities for Apple down there at 150. That is what I would be looking for, because you probably have the lows here in January. You'll make a new higher low, I would guess somewhere in the 150s, and then you'll make a new higher high sometime probably next year. Moving on to Amazon, much different. Okay, this is why this volume profile is so cool to look at. I'm sure, though, we could probably extend the volume profile back a little bit. It'll tweak it a little bit. But for the most part, with Amazon, you have overhead supply here. So we've said it for a while here with Amazon is right where the stock is right now, 130 to 150. It's actually going to be a little bit difficult for Amazon to kind of power through that, because you're going to have this large cohort of shareholders that accumulated these shares at 150, 160, 170 that are just finally happy to get breaking even over the past couple of years on Amazon. They might sell. That being said, you're still in the shorter term making higher highs, higher lows. Complicated situation with Amazon for really the downtrend that you've kind of been making for a considerable amount of time, for over 2 years now. Really, to cancel that out, you actually need to get to new highs. Moving over to Netflix, just making a beautiful pattern in this upper channel. We are down at the bottom of the channel. You have support where the stock is, essentially where the stock trades at about 404, a little bit further down at about 380. That is supported also by some volume profile as well. Even if the shares break through this channel, you could argue maybe it's just kind of flattening out our uptrend. As these uptrends get really steep like Netflix, it would actually make sense for them to flatten out as well. You would expect buyers to step in at about 340. If you're interested in Netflix, you want to build up a position, this honestly is is when you start, honestly. So moving over to Nvidia, this is the most terrifying chart of them all, as you literally don't really have demand for Nvidia shares until you get down to, I mean, really the bottom of it is about 124. Higher amounts of demand up here at the 180 level. That would obviously take you to kind of the bottom of the channel. I mean, if Nvidia reports earnings and they're really bad or whatever, the market just doesn't like it, and you go from 430 down to 170, it'll essentially be the continuation of the uptrend. It would actually be ho-hum, nothing to really worry about. Obviously, the market would absolutely take one of the probably the largest dumps that we've seen ever. And I'm not expecting Nvidia to do this, but this is one of the complicating situations with Nvidia. You do have a gap in the chart here, and again, there's very few people that have bought Nvidia up at these levels. And so that is why we are emphasizing the company's earnings on Tuesday so much, because here's an opportunity for Nvidia to reaffirm their revenue outlook and maybe even bump it up again. If you do that, the stock essentially re-rates itself up at these levels. And then this volume profile is more or less irrelevant. And you probably could like shrink it just to like a shorter time frame and get the sense that Nvidia, if we do have a pullback, market doesn't like it. The middle of the channel at about 280 is certainly a great spot to step in if you don't have any position in shares. And if it gets re-rated higher, then really the sky, I don't want to say the sky's the limit, but figuratively, it is. Moving over to Google, let's stretch out our volume profile again with Google. What you'll see is very evenly distributed, very similar to Meta. People have just been consistently accumulating Google stock. It's one of the few companies that we're looking at that is still in an uptrend, although we're like just teetering on it right now. You get pullbacks in Google. The first spot that's interesting is just south of 110. Moving over to Microsoft, also relatively even distribution. You are pulling back into an area with Microsoft right about the 290 level. Anything south of 300 on Microsoft, I think, should be bought. And then probably the most exciting chart of them all is actually Tesla. And we've been telegraphing this for weeks here on the channel. Once you made your highs up here in July, shortly after earnings, and the shares started reversing, we told you, well, there was this wonderful, wonderful conversion of multiple technicals. Okay, you have this gold line right here, which is essentially if this area holds, Tesla were to rebound, make a lot of sense since that's what the stock has been doing. You also have the back test to this purple line, slightly more complicated technical pattern analysis here, but oftentimes when you're Tesla and you break out of this trend that the stock was in, and we'll clean up some of these lines so you guys can see this pretty clearly, but Tesla was making lower high, lower high, lower high, and finally it broke out above. So once you break out of a longer term trend, this was a long-term trend, okay? It started in November of 2021. Here we are nearly 2 years later, and we finally broke out. What is very typical when this happens is you back test to that line, and then you resume a move higher. And again, that supports the pattern that Tesla has been making for the most part since bottoming out in December and January of this year. The final level that looks pretty tasty for Tesla from a support perspective is you do have some demand from a volume profile perspective. There is consolidation for Tesla right at this level. If you are bullish Tesla, I am not asking you to go and unload your entire margin account, or if you're already 50% Tesla, you're absolutely insane. But if you're one of these people that have just conservatively allocated to Tesla and you want exposure to the company, this is it. This is the spot, not where you unload all of your money. But if you can't buy at a level where 3 different technical pattern markers line up, then I don't know. I really don't know what you're doing, and I don't know what strategy you have. This is your opportunity as it relates to Tesla. Folks, I hope you guys have a wonderful and very safe weekend. We'll be back next Friday and obviously on Tuesday as well when Nvidia reports their earnings. Until then, I will see you again soon. Good luck with your investments.